60% average implied volatility for Yellen versus over 100 for the others. Was it her that did that, though?
Well, I would say yes, in a very simple way. She took it upon herself to make sure that she was communicating to investors and chief executives in a way that is really unprecedented. And you can see that in the forward guidance that she had a lot to do with coming out of the recession, coming out of the financial crisis. She worked for Bernanke as the vice chair, and she specifically devoted herself to communicating to the markets, communicating to the public in a way that the Fed had never communicated before. So that clarity of message was very consistent. And guess what? It turned out to be accurate because everything that she said increasingly became true.
So just removing ourselves from whether or not President Trump's tweets are exactly accurate, whether he can claim full credit, how do you respond to people who say, well, you know, the tax cuts have had a material effect on certain stocks, people pricing in that these companies would be able to save more money and plow it right back to their shareholders? That has been responsible for some of the gains, no?
So on this very program, Larry Summers, a very distinguished economist, former Treasury Secretary, said if you look at the market right now, actually the stocks that are rallying are not the stocks that would be most affected by tax cuts. The stocks that are doing well have been the ones that wouldn't be affected at all. So it's very hard to make the argument, which is the one that he's making, and we haven't gotten a tax cut yet, by the way. We haven't seen anything yet. We're still waiting for it. The market hasn't responded that way. It's responded actually to optimism in the future. And the stocks that are rallying the most are the ones that investors get excited the most are technology stocks.